Hey everyone, today's video is about should I actually get into the property market right now? On the basis of that, we're going to go into market cycles. Now, the reason why we're going into that is because if we understand the market cycles, we can make better decisions as an investor moving forward. Now, the problem that people face is they normally have a herd mentality by saying, okay, I'm just going to do this because everyone else is doing it. I'm going to go invest in Manchester because everyone else is investing in Manchester because it's a great market. I'm not saying it's not. It is a good market, but it depends on what strategy you're doing currently at the moment. A lot of people avoiding London at the moment because they're saying the market is flat. But I know people that are very aggressive in London at the moment, and it's because we're doing different strategies at different times. By understanding the market cycle, we can make better decisions, short-term, long-term, and understand how we fit into that based on what our goals are. So let's get cracking into that, and let's go into how that actually works and why you should be actually paying more attention to how the market cycle works. Okay, so this is the market cycle and how it actually works. So effectively, the market cycle generally is normally over, say, a 7 to 18 year kind of period, and they split in different sections. We've got the recovery phase, explosive phase, and the recession phase. And between that, we'll always have kind of like a mid-cycle dip, okay? Now, what we have to understand is obviously the recovery phase really has been from, say, a recession around 2009, 2010, 2011, that sort of kind of phase around then, okay? So we look back, say, 7 years, effectively, we're in 2019 at the moment, that takes us to 2012, where really we started that kind of recovery phase from where we're at the moment. So where we should be at the moment now is we're looking around about here. We're looking at that mid-cycle dip. Now, you're probably thinking like, oh yeah, with Brexit and that, that's probably why it's actually happened. That's obviously triggered a number of things, certainly put uncertainty for a lot of people in the market, and that's UK-based and non-UK based. What we have to look at is saying, okay, well, what is going to cause this mid-cycle dip? By causing this mid-cycle dip, you're probably going to be causing it is going to be clause 24, can't even spell today, with obviously the tax changes. This comes into full effect this January. So what will happen is anybody who owns a property in their own name or a portfolio in their own name, they're a high earner, then what actually happens is that you're going to see around about, say, January to, say, March time, 2020, we're going to see that sort of potential mid-cycle dip. Now, the reason for that is because one is there's going to be too much supply of stock to how much demand is. Say your amateur kind of property investors will panic and then they'll put on their portfolios for sale. We've been seeing this happen quite more and more often, where we specialize in portfolios with landlords and help buy those portfolios for them, and also obviously packaging them up and source them off to other clients. Now, what will happen is once this is settled, we're going to actually experience this explosive stage over here, which will mean that people are going to be overpaying, they're going to be buying emotion, they're going to be following the herd mentality, etc. And we've been preparing for this for the last kind of like 6 months, knowing that it's going to come for next year, and we're already working on strategies to really maximize that opportunity. The key thing is what we have to understand is, are we in this for the long term or the short term? Now, if you're in this for the long term, really, you don't have to panic. What you have to understand is that regardless of where you buy, and as long as you're making money while you buy, and you're buying at a reasonable rate, in the right structure, you can actually really go through this. And unless you want to sell, then it doesn't really matter if this recession happens down here, because what we want to do is we want to make a monthly profit every single month. That puts money into our pocket, giving us, returns on investments of, say, 15% return on investment, say, an 8% yield, that we know for a fact our money's going to be working harder in the bank. Okay, happy days. What we have to understand is that by knowing this process, we can then prepare ourselves differently. And this really comes down to understanding what is your strategy. What is it if in the explosive stage, and what is it right now buying a recession? What will happen is there'll be less buyers in the markets over here. And the reason for that is because people are scared. They just follow with the media. There's a lot of scarcity in the media, etc. That is a great time for professional investors to come in. So what does this mean if you actually not investing currently at the moment? If you're not investing at the moment and you haven't got any experience in property, then you need to start like getting as much knowledge, understanding the market, and really just applying that, or bring on a sourcing agent where they can actually got the experience and knowledge, and you can fast track that process. The other thing that we have to understand is that if you're in the market currently at the moment, what is your strategy at the moment? Do I have to tweak my strategy? For us, constantly, we're consistently buying. We're not going to stop that. What might happen is we'll do a bit more capital strategies in the explosive stage, okay? But also still buying, say, that rental income. Why? Because we're buying for monthly profit. Any property we're holding is monthly profit. So I hope that kind of gives you a bit of idea where we are in the market at the moment. Yes, we're going to expect to see a potential dip. That's okay. What we have to understand is how do we change and adapt our strategy. And what I'd like you to do is just comment down below, like, do you think that we're actually in this market at the moment? Like, do you think I'm completely incorrect? Listen, I'm open to other people's views. However, what we've seen the patterns happen over time is this is kind of where we're at. And I know for a fact we're definitely going to see a dip around about January to March time, potentially just before that. However, we have to be prepared for it. The question is, are you? Comment down below, what is it that you learned from this? Because what you learned from it would actually be different to what somebody else has taken from it. And we all learn from each other. I look forward to hearing from you. If you like the video, give us a thumbs up. Share it with somebody that you think will be valuable for. My name's Nick Clark, helping you profit from property. Thanks for watching.